What's going on, investors? AK here, bringing you the noise where we analyze the market and business news that you need to know. Let's go! A lot of investors look down on technical analysis. They see it as some kind of voodoo BS that doesn't work. But to me, that's just ignorant. Because if you want to be a successful investor, then you need to use every edge you can get your hands on. One of the greatest investors of all time, George Soros, understood this very well. In his book, The Alchemy of Finance, he gave us an example where he was struggling to understand the macro drivers of the German mark. And so he turned to his charts for help. He explained, the German mark seems to have established a pattern that consists of a sharp rise, an equally sharp break, and a halfway retracing of the decline followed by a period of consolidation. If the pattern holds, we ought to be at the bottom end of the second break. That would fit in well with my economic scenario. If the pattern is broken, I shall have to cut my exposure in half until I can reassess the economic scenario. Don't worry, I'll explain how this relates to JD.com soon, so stay with me here. Now, too many traders fall into the trap thinking that charts can predict a stock's future, but that's wrong. Charts only show you what's already happened, not what's going to happen. What they do is give you a real-time look at the buying and selling pressure in the market. With that info, you can get an idea of what kind of players are participating in that market. And by players, I mean buyers and sellers like long-term value investors, momentum traders, quants, and others. This will help you get a feel for what the big fish, aka the institutions, are really up to. You can see what price levels they're buying and selling at. Now, different markets are filled with different players, and each of these markets develops its own characteristics. And that's because the dominant players in those markets use somewhat consistent buying and selling strategies. And it's those transactions that create the patterns you see in the charts. So let's apply this concept to one of our favorite stocks, JD.com. And if you missed our video on our fundamental thesis about JD.com, I'll link to it above. As you can see from this weekly chart, since JD went public a little over 3 years ago, we've been seeing the same pattern repeat itself. We get a 6-wave coiling wedge followed by a 3-wave thrust higher. And you'll notice that each wedge becomes shorter and tighter than the one before it. Right now, it looks like JD is completing its third 6-wave coiling wedge. You can see where we are in the coiling phase much easier on this daily chart. If this pattern holds, we should see a price thrust higher soon. So what are these charts telling us about the players in this market? Well, it looks like there's a bunch of big fish like institutions and long-term value investors accumulating the stock on smaller and smaller sell-offs. The dip buying that keeps happening is what creates these coiling wedges. The 3-wave thrust occurs when price breaches the wedge pattern and momentum traders come in to push the stock higher. Now, this pattern we're seeing is not a guarantee of where JD's stock price will go, but it does give us an idea of where it could go. And it also tells us that this area may be a good place to add to a position or establish a new one. Now, of course, before you make any decisions yourself, you should do your own research and stick to your own investment plan. Do you think JD.com is a good investment here? Let me know in the comments. And don't forget to subscribe to this channel and hit that bell for notifications of new videos. Markets are crazy right now, so remember to stay fallible out there. I'll talk to you soon.